Hello YouTube, hello X, welcome back to the channel. My name's Max. My channel's name is The Covered Caller. I cover the option-based high income funds here at the channel. Jackson, do you want to make an appearance, buddy? Come here. Come here. Let me see you. Let me see you. Come here. Let me see you. Such a good puppy. Give me a kiss. All right. You got a full bowl of food over there. Could you just go over there and eat and let me do my live stream? You're making such a good appearance tonight. Okay, Jackson. He's being super needy right now for some reason. Jackson, what's going on? What's going on, Jackson? He's figured out how to manipulate me. He knows I'm not supposed to be working right now, and he doesn't want me to. Jackson. Okay. Okay, run along. We'll play later. Okay? We'll play in a little while. Okay, buddy. Thank you. All right. Let me get this camera fixed up again. All right, guys. Thank you so much. Let's get this show on the road. So you guys must be here for the Max Factor, because that's what happens here. It's actually the Daily Factor, which is my own proprietary metric. And it happens every night about this time, give or take. All right. So let's get this darn stock market up here. Let's get this darn stock market up here. Looking at a little SoFi with a friend tonight. Talking about a trade in SoFi. All right. Gosh, let's get the market going. S&P futures. Well, you gotta like that. They rebroke out. I mean, you gotta love it. Stocks can go up, down, or sideways, and lately it's been straight up. I mean, you know, since basically pretty much straight up since, you know, Wednesday when we bought them down there at 68.21. Here we sit at 7,026 on the March futures contract. Okay, so let's look at the do any of you guys trade futures? Chad, do you trade futures? Mon, you trade futures? Anyway, I'm terrible at it. I've blown up 2 small accounts. I mean, one $5,000 about 20 years ago, but it's nothing big. But I mean, I'm terrible at futures, but they fascinate me. All right. In any event, that looks good. That looks good. NASDAQ breaking out and staying above that breakout place. Heck yes. Bullish above, bearish below, right? Let's see. All right. You know, always talk about the pattern of pulling back to check the previous POC. And I mean, it seems like it happens so many times. This one almost did it perfect, this tell on this one. Anyway, whatever. All right, so that's let's look at Bitcoin. We'll look at some Bitcoin futures here. Well, they're reverted to the mean. We have done a reversion to the mean on Bitcoin. It got too low, way too low. At least in the time frame I study, in this time frame. It was too low, and it came back where it's comfortable with two-sided trading. All right, so let's look at gold and silver. Are you serious? This is Russian futures, but it's probably pretty close to American futures. Why can't I ever figure out? I always forget. GC. Why can't I ever keep that straight? Okay, it's for the COMEX. It means COMEX gold, but it's gold COMEX. Now I figured it out. That's how I'm going to remember from now on, because it trades at the COMEX. But yes, it's up too, just like the Russian gold. If they weren't both up together, there'd be arbitrage opportunity. So they're going to go up together. Man, that's impressive. Let's check out silver futures. We'll look at the coin. It's cool. Coinbase has futures now. Did you guys probably know that? I didn't know that. I don't have a Coinbase account. Maybe I should get one if you could trade futures, but I don't know. Futures are not nearly as good as options. I don't like. I have like a love hate relationship. It makes me mad that I can't trade them. I don't like them. I'm not suggesting them. But anyway, all right. I'm thinking about opening up a prop account and trading some futures here next week. Anyway, okay. So what are you guys up to? Yeah, I am on time this time. Correct. You can, or were you saying you're on time? Whatever. Yeah, because you were late to this afternoon ones. I think you meant you. Bond sold half your COYY and put it in some ISBG. I like that ISBG. That ISBG is something else. Yeah. I hear you, Chad. I hear you on that. I'm going to start trading T. Options are such a better instrument than futures. I need to make a video on it. I'm very passionate about it, but futures do have a place and can do fun, and futures are cool too. So anyway, but I'm going to start a trading. Yeah, with small amounts. Sometimes. So are you going to trade options or are you going to buy the TQQQ stock? Oh, you're going to do a put on TQQQ. So selling some puts on TQQQ. Kick it. Yeah, wonderful. So that's going to be kind of like TQQY, right? I mean, you may do, I'm not saying you're copying off them, but that fund sells puts on TQQQ, I believe. All right, so let's get into this lightning spread thing here. So that's the reason we're here. It's in the old download folder. So lightning spread, we have a special tonight. It's called T for Tuesday. So it's usually Tesla Tuesday, but I was trying to think of what else to do. I wasn't feeling very creative, so I just said, well, we'll just do all the T's. So anyway, so we'll look at the T's. Maybe we'll do letters sometimes. I'm kind of getting bored of this show, to tell you the truth. Or getting bored of the daily factors. So I'm trying to think of new stuff. And anyway, all right, let's introduce our contestants. We always start with the highest yield, which is usually the worst ETFs. Yield and risk are highly correlated. So the higher your yield is, the higher the risk of the fund is, just because of risk and reward. Anyway, we have TSYY, 290% yield. Now, the reason it's doing that is because, or part of the reason it's doing that is because the NAV dropped from 780 to 480. So you got a NAV that's down $3 on an investment of about $8 initially. So that's a pretty big hit, about 38.11%. So that's part of the reason why the yield's so high. The yield is high on this instrument, but it's also because we're dividing it by, because of all the NAV it's lost. All right, TSLW. Now this one is from Roundhill, uses a little bit of leverage. This one has a more reasonable NAV of about 61. And yeah, this one's a more reasonable fund. It dropped from 39 to 30. That's not great. I mean, 9 points on 40 points, or I know it's 39, but I like to round up. But 9, 18, 27, 36, it's a little bit less than 1/4, about 22%, right? Something like that. So yeah, 21.85. I just did that. Oh my gosh. That was pretty close. I missed it by 15/100ths. Anyway, it's TSLW. You can afford to lose 20% NAV if you're going to pay a 60% yield, but other things being equal, I'd rather not lose 20% NAV. Anyway, TQQY, we were just talking about this one. Its ears must be ringing. Now, this thing is based on the Qs, the triple Qs, and it's dropped from 19 to 15.5. So about 17.5%. Now it does pay a generous yield of 58%. So anyway, then we have TS2 from Rex. This is based on Tesla. Even this one, his NAV has dropped from nearly 30 to 24. Right, nearly 24. Nearly 30 to nearly 24. 6 points, otherwise known as 20%. So paid a 57% yield. We have TSMY. Now this one, look at this one. Now this is based on Taiwan Semi. So it's not really fair comparing it with these other ones, but whatever. We'll just, because it's a different instrument. It's a different underline, but whatever. So this one's based on Taiwan Semi. Now this one's gone from 1690 to 1635. So it's lost a little bit of NAV. about 3.25%, but it's paid a 53% yield along the way. So that's been a pretty darn good investment. And this thing also, TSMY has a 1-year total return of 41%. That's pretty good. But of course, chips are on fire lately. That's why Chippy's doing well, and Soxy, and semiconductors and microchips are on fire. Then we have TSLP for the Curve. Now these guys do a great job, but even Curve had some NAV erosion this quarter. Dropped from 25 to 22. There's no way. Kind of bothers me when managers say their funds don't have NAV erosion, because they all do. It's just part of its anyway. So now, people think the Curve doesn't, but it has. Funds can have limited effects of that, but there's no such thing as, oh no, my fund doesn't have NAV erosion. No matter how safe it is, it may just have less than your fund, but it still has NAV. That's a fact of life. TSLY. Now this one's based on Tesla from YieldMax. This one's NAV has gone from 43 to 25. So it has more NAV erosion than TSLP, but TSLP's NAV is eroded also, right? Anyway, TSLY. Does TSLY really just pay a 26% dividend? That doesn't sound very high. Let's check that out for a second. How does that sound? Let's check that out on a little FinViz. Yeah, this has it at 89. Okay, there's an error on the spreadsheet. It's not that big of a deal, though. I won't get upset about it. All right. Anyway, there's TSLY. That one's not going to win anyway. Now here's TDAT. Now I know this is one that a lot of you guys like, me included. Went from the NAV 90 days ago was $25, $24.99 actually, and now it's $25.55. That's up 56 cents. Isn't that much, but it's 2.2%, and it's more than any of these other dogs are up. So TDAC has that going for it. But of course, it's just NAV, and TDAC only pays a 14% NAV. So I mean, not that some of these other ones, like maybe TSMY, aren't doing a lot better than TDAC, but TDAC is one of the better ones for sure. Good NAV right there. TLTW. Now this is based on bonds. TLT, and I actually had some of this. You would think it's Roundhill because of the W at the last letter, but it isn't. I forget who it is. It's TLTW, iShares, ProShares, one of the bigger companies, I think it's iShares or ProShares. Anyway, yielding 14.67. Now this one's NAV eroded from $24 to $23, just about. Dropped about $1, which is about 5%. Now T-SPY, we're back to Tesla surrogates based on Tesla. This one's done pretty well. NAV's just gone from 26 to 25. That's not too bad. But of course not, because it's T-SPY. T-SPY does a great job. T-SPY is uncapped at night. TDAC is uncapped at night. So these funds are partially uncapped. Which is big. Which is big. They were one of the first funds to partially uncap. The YieldMax did it first with the spreads, and then these guys came along. These guys in Roundhill came along and did the only selling options during the day and staying uncapped at night, which is, a similar idea. Anyway, good job, T-SPY. Good job. Good job there. Then we have TLTP. Now this is based on TLT. TLTP is from, you might think this one's from Curve, because it ends in a P like TSLP, but it's not from Curve. It's from somebody else that I should know. TLTP. Is this TLTP is, it's Amplify. Okay. Let's look and see how TLTW was. It was iShares. Yeah. Okay. All right. We're almost through with this. So TLTP, 12% yield. NAV, fairly steady, lost about 4%. We have TUGN. NAV lost about 4%. Decent yield. TDVI. NAV lost about 4%. Only paid a 7% yield. So that's not great. I mean, then we have TLTI, NAV lost about 4%, only pays a 6% yield. I love NEOS, like NEOS a lot, but TLTI doesn't appear, based if those metrics are right, like it's having a great run of it lately. Which TLTW? Gosh darn it. TLTW. I mean, Neos is a good looking, is a good company and stuff, but whatever the strategy is on this one, at least over the past year, it's been working out a little better in TLTW's favor. I might like to make a good video. I mean, I wonder why TLTW is doing that much better. They've got the performance doubled over a year on a total return basis. TLTW's NAV went down 56 cents. TLTI's NAV went down 50 cents. So that's roughly the same. Their NAV was roughly the same, but TLTW paid twice the dividend. Because look, they both paid $3 over a year, but TLTI cost twice as much initially. So it's going to have half the yield, right? TLTW looks good there. Maybe I need to re-add that. All right. So let's get back to the list. Then we have, what the heck is TDVI? TDVI, let me think. TDVI, it's covered. I don't know. Okay. I put this in here. It's a dividend fund, but people are talking about it like this is a good one. People are comparing it with SCHD. And it is. It pays a giant yield. And I think it's like a blue chip dividend fund. Now, dividend target income. I don't know if they also sell premium or if the target income just comes from the dividends. Looks like Texas Instruments missed earnings. But, IBM, because I don't think these things pay 7%. I don't think you could get 7% from, pretty sure you can't get 7% from these stocks. So I bet you they sell calls also. In fact, I'm pretty sure they do. Let's just look at it real quick. By current appreciation, blah, blah, blah. Yeah, utilizing an option strategy consisting of writing or selling U.S. exchange-traded call options on the NASDAQ 100 and the S&P 500. So that's what they're doing. They own those companies, and then they sell options on the index. But those companies are representative of the index. And those companies do pay somewhat of a dividend. They probably get some dividends off those companies, but they aren't selling options on those companies, because if they did, what would happen? They would get it taken before the dividend. They would risk getting it taken before the dividend. So you could own a basket of dividend stocks. Maybe that basket pays 2%. I don't know, 3%. And then you could sell options on top of it, make it a target fund, and pick how much you want to earn, and then just sell options enough to meet that amount. And you ought to have a lot of upside. That's not a bad looking fund. TDVI, why don't I have any of this? I need to buy this. Come on. Why don't I have any of this darn thing? I like this. I like this idea. Heck yeah. Beating the SPY. And paying a yield. Anyway, all right. Let's get back to that one may be editor's choice. I don't know. I'm tempted to make well, we'll talk about editor's choice in a second. All right. So let's look at some other metrics. On Moxie, it's all about TSMY. I mean, and I think the Moxie rating is the risk-adjusted yield or the volatility-adjusted yield. It's how many units of yield you get per unit of volatility the fund generates. So it makes a lot of yield considering how volatile it is compared to the other ones. Tuggin's number 2. T-Spies number 3. TLT. These are good funds. The Moxie ranking's a good way of looking at it. Sometimes I like the Moxie ranking more than the Max Factor, but the Max Factor is more of an all-around ranking. But we look at you have to have Mox and Moxie. Mox and Moxie are important. Mox is just a different way of. Oh, that's what Moxie's over. Moxie, you have to have been around a year. That's what it is. They're the same stat, but Moxie's for the people that have been around for a year. But yeah, TSMY is a monster. Doesn't get much better than that. All right, so let's look at the stable DEX and see who the most stable fund is. Now, TLTP, it's based on bonds. It's from Curve. No, not really. It's not from Curve. But you would think it is because of the P. It was from Amplify. Yeah, Amplify. Anyway, yeah, Amplify does a nice job. I mean, then TLTW is number 2. I might make, gosh, TLTW is not a bad looking fund. All right, so for the Max Factor, let's see what we have. In the Max Factor, right there, short-term Max Factor. Are you ready? TDAC. TDAC, and if you think about it, TDAC's the only one of the, because this doesn't tell you the best fund in the world. It tells you the best fund of the ones on the sheet. It compares them against each other. So, and when you look at all of these other funds have negative NAV. Some of them a lot of negative NAV. So the having positive NAV in a world where everything else has negative NAV and still paying 14.8%. Now let's look at it's a legit fund, but look at number 2 is TDVI. And TDVI was like number 4 on the Moxie ranking. Number 3 is T-Spy, which is a good fund. I don't think anyone would have an argument with T-Spy, TDAC being at 1, 2. TLTI kind of surprises. Why? I don't understand why TLTI is ahead of TLTW. No, anyway, but I'm comfortable with TDAC, TDVI, T-Spy being 1, 2, and 3 for sure. All right, so for the editor's choice, yeah, we're going to go with TDAC. How can you go with anything but TDAC? I thought about maybe making a T-Spy or a TSMY. TSMY beats TDAC pretty bad on total return. I thought about making a TSMY or TDVI. TDVI is more impressive than I remembered. All right, so what do you guys want to talk about? Buy the stock, just limp in and build. Okay, so yeah, I got you. You're going to start trading. Okay, I got you. Bonds limping in on those miners. TQQQ entry at 56.30, 1 minute. Big red, small green. Buy the break of a high green to open big red. I'm just holding and not closing. Let's look at that. What the heck is that? I think there's a data error or something. No. Or maybe it's just. Let's see. All right, yeah, let's get it on daily. And let me get back a little bit more perspective here. Well, yeah, you did talk about a 1 minute candle. I'm not going to show 1 minute candle, big red, small green. But I get it. Buy the break of the high of the green to open the big red. I'm just, yeah, I got you. I like that. I like those kinds of setups. Yeah, and it's obviously working out well for you today. Heck yeah. You're in at 56.33. All right. LFG, baby. Right? Max, can you please explain to people the blocks isn't eroding? Well, started. Oh, I don't know. I used to always argue with people and explain to people, but I'm out of the explaining to people business. If people don't get it, it's fine with me. But anyway, yeah, okay. So here's the thing. It's just there's a lot of moving parts, and you guys all get this, and I talk about it all the time. But you know, it really depends on how you define erosion. When I was saying that just a second ago, I was looking at something that old Howard, and I like Howard. I'm not saying that bad about Howard, but he'll come on here and say that he designs his funds with no erosion and stuff or whatever. I mean, but the curve funds will, but it's not true. But I know what Howard means. He's talking about what the true erosion. He's talking in a more philosophical way. Of course, they're going to go down when the market goes down. But a lot of people think the fund managers purposely design them with extra erosion or something. They don't understand it. It depends on the strategy they pick, and it's just the way the math works out. But yeah, I would on blocks. Blocks is the lightning spread ones are kind of a different creature because they get a little bit extra downside. So in a down market, it does look like a road. I can see why people think that. Now, it isn't. It's just the stock going down. But because it's going down extra and it looks like you're getting ripped off, so that's the thing about the standard covered call funds. They don't do that kind of erosion. They go down a lot slower because of their selling, or not a lot slower, but they go down quite a bit slower. But the lightning spread funds go down faster. What causes the true erosion, though, and you guys know this, is the not bouncing back fast enough. Or the true erosions cause, it's not just the market going down. It's over a longer period of time, underperformance over a longer period of time, related to the constantly being capped and stuff. But yeah, so blocks is going to be one that I think some people it's just going to be too risky for some people because it's going to go down extra, and it has some of the riskiest stocks. And it's just like some people won't touch ULTI. I mean, ULTI isn't much riskier than blocks. I mean, it. So with blocks, the game with blocks is. Yeah, it's going to drop quite a bit when it drops, but when it goes up, it's a thing of beauty. You're playing that it's going to, you're definitely playing for a rally, and and it's going to go up more than. Let me try and think of a way to illustrate this. Well, let's put in blocks here. Blocks is your question. Blocks and Meme Y right now, I think, are the best. Well, blocks and K yield right now, I think, are the best constructed fund. Meme Y, the jury's still out on, but I think blocks and K yield are the best, kind of the cream of the crop in the Diva group. And so let's do an overlay with blocks against let's use. And I was trying to show. Well, yeah, I guess I can kind of show it that way. Okay, now let's do blocks. Let's see. Blocks without dividends. You can see the market went from down 12% to, or wait, the market went from up 12% to up 18%. In the same time, blocks went from flat to up 26%. It just, I mean, it moves up so fast. So you just need a period like this where you have an upward trend. So anyway, but yeah, blocks just got hurt by a lot of people don't even be on erosion. A lot of people think if it goes under the initial price, it's no good or whatever. All of these are going to go under the initial price. I mean, that if it goes under the initial price, that's Anyway, I'm seeing a lot of that lately. It's literally depending on Bitcoin. Yeah. I'm trying to think. I mean, and I'm trying to think of a way to compare these fairly against each other. And the best way I can come up with is the buffer report. And we look at blocks versus Bitcoin, and we see it, like we do every day, and we see which ones are outperforming the parent. But but unless you're looking at two funds that are based on the same parent, it's an apples and oranges comparison. But yeah, there's a lot of every time I get on Twitter, I end up getting triggered and I get mad about something somebody posts and want to post back or anyway. Okay, if you want to look at a 1 hour setup on TQQQ 54, big red, little green. Okay, well let's go look at that TQQQ. Yeah, but I mean, I'm with you, Marcus, on the blocks isn't an ETF really. It's a Bitcoin investment. It's in an ETF wrapper and it has stocks in it, but it's a hedge fund style Bitcoin option strategy. I mean, so it's definitely not for everybody because when it drops, it's gonna drop like crazy. But yeah, a lot of people aren't gonna get that one. All right. Let's see. Let me take this off though. I want to look at this setup here. Let me remove this one. All right. So on the TQQQ, so we're going to look at the 1 hour setup, the big red. So I don't know if I'm familiar with this setup, big red, little green, or is that what it's called? I mean, I think I get the idea of it, but I don't know if that's a strategy that I've been turned on to yet. Maybe explain it to me in the comments a little bit. But anyway, so I'm turning. Okay, so at 54, so here is 54, big red, little green. What did he say there? Oh, big red / green doji or whatever you call it. Yeah. So I call a doji a bar like this one right here, where it has just as much tail on top as on bottom, and the body's very small, or like this one right here. But I'm not seeing the exact setup. I'm not doubting you though at all. Daily is at 49. Hey, SB's here. Thank you for being here from the great state of Mississippi. Big red, green doji, or whatever you call it. Oh, 5138 is another. Okay, so let me try to go find 5138. $51.38 is right here. You mean this one, right? I'm just not seeing it. Heck yeah, options, bro. Options, bro. We got some. Well, we aren't really talking options tonight. We're trading bros in here tonight. We're talking about trading. But yeah, we could talk some options. All right, under candles are a little different from Robinhood, but the same concept. Okay, yeah. I hear you. I hear you. But what's your pattern? Do you look for a doji and then buy the breakout of the doji, or I mean, I'm just wondering what the let's see. I'll show you a setup that I like. It's well, I don't see it really going right now, but I like bullish engulfing patterns. I mean, I don't see really any of those. I like a 3-bar, what I call a 3-bar reversal. I don't know if it's really what it is, and I don't see any really clean examples of it here either. But anyway, but I love candle patterns. I'm just not seeing them on that chart. Oh, right there at 51. All right. Oh yeah, I do see that one. So you're saying you buy the breakout of that? When you see that, you just play the. I mean. All right, SB. Thank you for being here, bud. Talk to you tomorrow. Break the high of the green doji. Okay, yeah. You did say break the high in your first one. Okay. I got you. Just play that. Where do you put your stop? Do you use a stop? use the stop, or yeah, I bet you use the stop. Take profit at the top of the red. Okay, yeah, now I get it now. I get it now. Let's look at let's. Okay, I'm still on. Okay, dashboard, your portfolio, dividend calculator. I need to put my portfolio in here. Anyway, dividend calculator, capture strategy. Oh, we don't need a dividend calendar. I was looking for an earnings calendar. I thought there was one in here. I know we have some earnings coming up. I know where to get one on the internet. Man, he adds more stuff to this every time I look at this. Here's Roddy's synthetic fund. I need to get on Rod's channel and look at this someday with him. Anyway, but yeah, I'm really interested in all that stuff. I want him to make a fight. I just need to, maybe he's listening now. He needs to make us a lightning spread scanner where it can scan ETFs or stocks and see which ones set up for lightning spreads. Meet the criteria for lightning spread. Yeah, but here's SB and I were talking about this night, zebras, and yeah. But you guys, we were talking about that on the morning show also. Anyway, that's real interesting. I like that. All right. I got you. You can put your take profit at the end, but you're letting it run. Okay, well, let me ask you this. When it gets past the end where you were going to take profit, do you at least move your put to break even? I mean, your put, sure. Do you at least move your stop to break even? Do you trail a stop, I would imagine? Hey, Ambassador, what's up, bud? Yeah, Tesla is coming up well. We got an Ambassador. We got an email. Okay, I'll check it. I was getting ready to, anyway, yeah, I'll check it. I'll check it and respond later, my friend. Yeah, we were over here. We've been talking about arbitrage tonight, and I was hoping that your strategy's going well. You probably telling me about it in the email. I'll read it and respond. Yeah, let her run. Absolutely. Hey, move the break even to and let her run. That's what I do when I trade futures. Like I said, I'm not even good at it, but I know that's what you're supposed to. I don't think that's the reason I'm bad. The reason I'm bad is because I'm too impulsive. I never seen a setup I didn't like. I had to take every setup I see. I have no patience. Zero patience. And that's what's so good about options, because what I do, how I solve the problem in options is I just invest what I could afford to lose, and that's my stop loss. So I take a directional shot instead of, and if I was going to buy the T triple Qs, instead of buying, I'd figure out if I had $100,000, I was going to start a T triple Q campaign. And I wanted to risk, I'd want to risk about 2% a trade. So no more than 2,000 a trade. But when I thought it was going up, I'd buy calls or call spreads or sell puts or whatever. And then when I thought it was going down, just do it at 2,000 times. And then if you have winners and your bankroll increases, you get to 150, then you're doing 3,000 a time. And that's the way I would, that's what you're supposed to do, but you have to be selective about your setups. I tell you, I've never met a setup I didn't like. Anyway, whatever. You're just trying to build a position. I got you. The thing is, there are some good cases for stock. I'm just cynical, and I just want the money. I don't care about the stock. I'm just trying to extract the money from the transaction. But you're right. If you want to build a portfolio of triple Qs because you're bullish over the next 5 years, it's going to be a great 5 years. You think you're going to do, and that's great. So you want to build up some shares of those, even though they decay and stuff. You're aware of that. No, that's great, because as you buy more shares of those, when they get kind of toppy, you could sell calls on those as they pull back. You know what I'm saying? You could, as you buy it, there are advantages to having options, to building a position, and you could still use options to trade against the position. But I'm saying I would just buy call spreads and skip the stock. But that's just me. Yeah, Forex trendy. Okay, I got you. But you're just blowing position. Okay, well, yeah. Well, good. I'm trying to learn from you too. That's why I keep asking you. So what do you need me to respond? I'm trying to figure out what you're doing as well as me. Guys, remember, it's not financial advice. Consult a professional advisor for all your financial needs. Barring any last minute questions, I'd be happy to sit around and talk, but barring any last minute questions, I'll let you guys get out of here tonight. And but also don't forget, you can always support the channel if you wish at paypal.me, Max Convexity. I appreciate that. And and also don't forget, like and subscribe. I can't believe I just learned how to do that. I just learned how to use the like and subscribe thing. I wonder if there's more of them here. What else could I do? I could do something like that. I'm out of control. I'm absolutely out of control. You can't give me technology. You can't give me technology. Hey, gosh darn it. I want to get rid of that now. Delete. All right. Anyway, guys, so take it easy. You guys have a good evening. Or barring any questions, I'm going to look at the questions. The PayPal link is I'll put it here, and I'll start putting it in the description, and I'll put it in the description as well from now on. Good. That's the reason I always say it. I never say it. I never said it, and I didn't get one tip for like 6 months, and then I started saying it, and then I get about 1 tip a week, just by saying it. That's all there is to it. But it's enough to pay for some of my AI bills. The other thing is YouTube is great, but they take you can also do a super chat if you want to support a channel. But they take there's a committee. There's 2 things. You don't get it for a month and a half, and there's a commission. And where's PayPal, no commission, and you get it instantly. So anyway, all right. Come on, man. All right, guys. You guys take it easy, and I will talk to you later.